It gives me pleasure to introduce Kyle Floyd, who is the CEO and also the founder, one of the founders of VOX Royalty Corporation, a new royalty company that just became public earlier this year, but also has been working on the strategy since 2014, which I think is important to point out. Look, I'm going to run through some disclosures. Certainly on VOX Royalties side, I encourage you to look at the disclosures on the second page of Kyle's presentation. From a Red Cloud security perspective, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this webinar should take into account does not take into account the particular situation or needs of investors. And we encourage always at Red Cloud to make sure that investors seek their own advice and their own investigative work to make their own investment decisions. And with that, Kyle, I'm going to pass it off to you.
Terrific. Well, thank you, Andrew, and thank you, everybody, for joining us for this presentation. It's a pleasure to be with Red Cloud and have the opportunity to tell you a little bit more about VOX Royalty Corp. Well, we have the distinguished privilege of being the only royalty company presenting. So I will give an overview on what royalty companies do and also how VOX is different and how we are a very interesting opportunity for investors to be evaluating right now. As Andrew alluded to, VOX was founded in 2014. So we are a new public entrant, but we are not a new entrant in the royalty space. We have built the fastest growing royalty company on the planet, and that's bar none. I'm going to get into how we've been able to accomplish that and the deep value that we're able to find acquisitions and bring those into the portfolio for our investors. But I want to bring investors up the curve in terms of understanding why royalty companies work so well as a way to play the commodity sector. Royalty companies have been around now for more than 20 years. And royalty companies have outperformed really essentially any commodity-based benchmark that you can compare them to, whether that's the physical, whether that's the miners, whether that is the ETFs. Royalty companies have outperformed. They've even outperformed the S&P 500. A couple key reasons for that outperformance. One is it's a much more secure form of investing in that there's diversification in the underlying royalty companies across multiple assets. VOX has 42 royalties and streams at this stage, so it's well diversified. The other opportunity that royalty companies present to investors is the interest is typically in the top line revenue of a particular mining asset. We don't run the mine. We simply clip a coupon or a percentage of the revenue that the mine generates. This interest is undiluted. That means when the mining company needs more capital, VOX is not on the hook for contributing that capital, but we get all the benefits when those use of proceeds are used to grow the operation, grow production, increase resources or reserves. That's a huge benefit to us and for our investors in that that's undiluted, typically upside for the life of that operation. Meanwhile, we get the benefits of not having to contribute further capital, and we get the benefits of being diversified across a number of different assets. Royalty companies have outperformed, but they have a lot of outperformance in their first 3 years as publicly traded businesses. We've seen this across the spectrum from Franco to Wheaton to Royal. They've obviously been market darlings for the better part of the last 15 years, delivering great returns for their investors. But if you look at their share price appreciation in their first 3 years as publicly traded businesses, they did very well for investors, appreciating on average more than 350%. Two more recent entrants over the last few years have also appreciated, similar to Wheaton, Royal, and Franco in this manner, up between 400 and 600% in their first 3 years as publicly traded royalty businesses. The other key characteristic to consider when considering royalty companies is that royalty companies, if you look at Franco as the largest player in the space compared to the gold majors, they've outperformed, that being royalty companies and Franco in particular, through every commodity cycle, whether that's a bear market in commodities, a flat cycle in commodities, or a bull market in commodities. Royalty companies typically outperform. And so that presents a very interesting opportunity for investors where in all cycles, royalty companies have shown that they're a great investment versus the commodity space. Going back to VOX in particular, as Andrew mentioned, we were founded in 2014. We went about building a company that could create competitive advantages in an industry that is increasing in competition but create advantages that would give us defensibilities to our business, not just now, but for many years into the future. And we've been very successful at doing so. We patiently built intellectual property through a database of 7,000 proprietary royalties that we high grade to find great value and bring those into our investors. Most of those opportunities our competition or our peers are blind to. We also went about creating deal sourcing networks around the world in far-flung jurisdictions that give us the opportunity where we know about a royalty to also find the owner of these royalties and to transact. And underpinning both of those two legs of our stool is a technical team that understands the asset level risks and the asset level opportunities. We start with the quality of the asset and then the royalty that overlays that asset. And the final piece of the puzzle is value. We make sure that we're investing in quality assets for our investors with a team of geologists and mining engineers that lets us really truly evaluate those risks and those opportunities more so than most of our peers or competition. We have been the fastest growing royalty company over the last 18 months. That's in large part because of those competitive advantages that I just mentioned. We've assembled a portfolio that's reached critical mass. We have 42 royalties and streams. It's very heavily precious weighted. It's also very heavily weighted to safe jurisdictions, namely Australia. We've also built what is the deepest pipeline of opportunities in the royalty sector. What we like to say is we not only do more deals than every other royalty company, we also pass on much more deals than any other royalty company. Quick snapshot of our business. We are about a $100 million market cap, a little bit less today. We raised about $14 million in our IPO in May 25th of this year. We have no debt, a very clean capital structure, very few shares outstanding, and I believe that we're very well positioned for near-term share price appreciation with the fundamental value that we continue to create on a daily basis. Our portfolio is well diversified. It is well positioned for very significant growth in all the categories that matter as a royalty company: total volume of royalties acquired, exploration assets moving to development, and development assets moving to production. We believe we have one of the most interesting organic growth profiles in the industry. Quick background on the team. I founded the business back in 2014 with the idea that we could create a royalty company that delivered great value for our investors and value with growth. We've delivered that and we continue to deliver that for our shareholders. We also built what is one of the most significantly technically weighted teams in the industry, with a combination of mining engineering experience and geology experience and overall transactional experience in the royalty sector. Our team has almost 40 years of combined royalty-specific expertise and experience operating in the space. That is an anomaly for a new entrant such as VOX into the public markets. Most royalty companies are being spun out or created with management teams that have very little experience in the royalty industries that they now find themselves in. We've strategically located our team around the world to make sure that we're in front of as much deal flow in the major mining markets that we possibly can be. We have a full-time team of 6. I will tell you that everybody is maxed in terms of our processing and deal sourcing opportunities. We continue to deliver great value for our investors with a team that finds more opportunities than anybody else in the space. Our portfolio, as I mentioned, is precious weighted. Precious metals is the focus of our business. It's as much organic as it is by design. Our investors want us to focus there, but there's also just, frankly, more precious metals royalties out there in the market, as gold, being one of the most explored for commodities since the beginning of time, has had mining tenements linked to gold change hands more often, which really gives rise to third-party royalties, which is what we primarily buy. That means royalties held by not the operating company, but by a third party. We buy those. There's more gold and silver royalties than most other royalties. So gold is our focus, but there's also more quantum of those opportunities in general. But very interestingly and very important for our investors to understand is that our portfolio organically is growing significantly. We have an amazing amount of work being done on our portfolio. There's more than 120,000 meters being drilled across our royalty portfolio assets. That is drilling and work that's being done that's not paid for by VOX, but absolutely increases the organic growth of our business and those attributable ounces. We also have more royalties moving into production than almost any other comp or peer in the marketplace, certainly any royalty company our size. We have 4 production stage assets now. We believe by the end of next year that will be close to 8, and that does not count our acquisition pipeline. That's just what's in the portfolio already now. VOX indeed has been the fastest growing royalty company. No asterisk, no caveats. We've been the fastest growing royalty company. But it's not just that we're the fastest growing royalty company, and that's a function of our ability to analyze opportunities and be in front of opportunities underpinned by our intellectual property and our deal sourcing networks. But it's also that we're in front of opportunities where we're typically the only royalty company at the table. That allows us to find great value in what we call bilateral opportunities. Those bilateral opportunities present the opportunity for us to transact at fair value for both the buyer, us, and the seller, bringing in royalties in volume at great value on great assets, where most of our competition relies on heavily banker shop deals where they're one of a handful of parties bidding on those assets and typically paying top dollar in a competitive process. We avoid those processes generally, and we are generally focused on continuing to execute with a bilateral strategy for bringing in new royalties, allowing us to bring in new royalties at great value. VOX, we've been in this industry now for a long time. As a management team, collectively almost 40 years. We've really paid attention to what has driven value in the royalty sector for investors and really distilled that and focused on those key attributes for our investors to create the company that creates the most value for our shareholders. One of the things when you look back at royalty company outperformance that really drove a lot of that outperformance was a technical team that could really ascertain the value of the asset at the asset level. So we have a team of 2 engineers and 2 geologists that really allow us to do that and cherry pick the best opportunities. We also, as mentioned, generally avoid broker deals. We look for the bilateral opportunities. Our intellectual property and deal sourcing networks generally allow us to do that, allowing us to bring in opportunities at better value. We don't pay for neurology. We are very focused on asset quality and defensible and reliable metrics and data around our assets. So we do not purport to go out to investors. We do not go out to investors saying we bought a royalty over a mine, and then it happens that the royalty is actually not over the mine, but on moose pasture surrounding those operations. We truly focus on typically resource projects that already have a resource or reserve attached to them, where we can form a very significant and science-backed technical viewpoint on the asset. And our portfolio demonstrates that. We have a very significant amount of drilling and active work being done, increasing the value of our royalty assets, where there's a lot of peers out there that do not have very much work being done on those assets, which will eventually underpin a lack of growth in the industry, where VOX has an asset base that is very significantly growing because of our partner work and partner drilling on those assets. One of the key foundations of our business is the intellectual property. We acquired the royalty database from Mineral Royalties Online and have been utilizing this database to cherry pick and high grade some of the most interesting royalties around the world that are held by various parties that you would never expect. We bought royalties from telecommunications companies. We bought royalties from hearing technology businesses, automotive parts companies, technology businesses. We've found royalties that the market has otherwise forgot about or doesn't know about. And we've been able to execute on these royalties with great volume and with great value. And that is something that significantly differentiates VOX from our peers. Our organic growth is very significant. It's one of the things that investors look for generally. It's one of the things that gets rewarded also generally in terms of share price appreciation and development in that category. We have 4 production stage assets now. That's going to 8 production stage assets as we exit 2021. That does not count the acquisition pipeline that we have. That is likely the deepest in the industry. We expect that 30% of our assets can be in production over the next few years. To put that in comparison, Franco-Nevada, one of the most successful royalty companies in the history of the sector, has around 350 royalties with about a third of them producing, which is highly significant. As a model, that's what we're looking to achieve. We want a high number of our royalty assets to come into production, and we're focused on finding those royalties that have that opportunity. VOX has assembled a very deep and diverse group of counterparties operating our royalty assets that provides really two key advantages for our shareholders. And it's certainly an anomaly for a company early on in its days as a publicly traded business like VOX. The advantages are, one, diversification of risk. That's easy to understand. We have 42 different royalty and streaming assets. That means that if any one asset were to have problems, we're well diversified against that risk. However, what we're finding is with a lot of our counterparties in Australia, where you've had all-time high Australian gold prices, we have found that they've been very well capitalized and well incentivized to move their projects forward at a faster than expected pace. And so we're seeing organic catalysts exceed even our expectations, where we believe we found great assets. We believe that we had obviously an optimistic viewpoint on what those assets would achieve. Those viewpoints and those expectations are being exceeded in most categories, as our royalty operating, or the operating partners of our royalty assets, are moving these assets up the development curve very successfully. Quickly, I'll touch on a few highlight assets for us. Again, we have 42. These are just a few that give us immense value, both presently and as they continue to develop in the near term. Koolyanobbing is a producing iron ore operation. We bought this from a telecommunications business. We took a very technically informed viewpoint that production would grow and the resource and reserve would grow. That, in fact, happened shortly after we had the project under LOI. Segilola is the highest grade open pit gold mine in Africa from all sources that we can find. It is an asset that's in construction right now. It should be a very significant near-term cash flow producer for us in 2021 on a very interesting asset with a great counterparty. Bowdens is a royalty that we found that was under the radar screen. It is the largest developing primary silver project in all of Australia. We're very excited about this project. Obviously, with silver prices performing very well over the last 12 months, this is an asset that's produced already tremendous value for us in terms of growing up the development curve and the attributable potential cash flow to this asset. Ashburton is an elephant for us. It was a gold project held by Northern Star that recently was spun out and purchased by a group called Kalamazoo Resources. It's a very high grade, very significant resource right now with about 1.7 million ounces. We believe Kalamazoo is going to be very successful in drilling this out. They are targeting between 2 and 3 million ounces for this deposit, which has the potential to produce on a standalone basis as a 100,000 ounce producer as it continues to move up the development curve. Dry Creek is a royalty over Karora Resources, part of Karora Resources Higginsville operations. This is an asset that is in production, is expected to yield meaningful cash flow to us in 2021, if not sooner. One that we're very excited about. Karora has proven to be, formerly RNC, a very successful operator. And lastly, Mount Ida. This was a royalty that was acquired from a hearing aid company or hearing technology company, where we had great intelligence through our database and were able to bring in a near-term producing gold royalty at a fraction of the value that it's going to produce for our investors, and one that is also in the near-term producing category that we're very excited about. VOX is very focused on doing what we said we're going to do and continuing to be accurate in terms of what we forecast for our investors and delivering on the milestones that we say that we can deliver on. We've developed this track record. We now have 3 independent research analysts covering us. We've developed a great relationship with most of our investors that we continue to build upon. And we are building a royalty company that organically is creating a lot of value for our investors. And we're going to continue highlighting those opportunities for our shareholders and to the markets. And we expect the next quarter to be very interesting in terms of the organic catalysts that we'll be producing. In summary, VOX is delivering the highest growth in the industry. We're delivering that growth in all categories that matter as a royalty business. It's both number of assets, it's exploration moving to development, and development moving to production. We expect a lot of organic catalysts to come over the next quarter. That's both in terms of assets that have been in development stage going into production, so revenue growth. We also expect very significant drilling results and resource expansion results coming from our portfolio. So when you look at VOX, we are the growth story in the royalty sector. We are moving up the curve very quickly. we believe we present a very good entry point for investors right now. And we believe that we will quickly be valued in line with our peers over the next quarters as we trade at a very significant discount to our peers right now. We trade about between 40 and 50% of the value of most of our peers. And we expect that at some point the market will reward us for the growth and for the quality of growth that we're bringing forward for our investors. So thank you again to the Red Cloud team and Andrew. And if there's any time left, I'm happy to open it up to Q&A.
Look, you took the entire time slot, and this was a great update and a great introduction for those who haven't heard the VOX Royalty story. So, Kyle, thank you very much for presenting here today. And for those interested in participating in the next presentation, I encourage you to move over to the next presentation now. Thanks, Kyle.
Cheers. Thanks, Andrew. Thanks, everybody.